Hier ist die neue Folge der Ökonomie-Videos.
If you've ever glanced at a Bitcoin price chart, it looks like the world's craziest roller coaster, right? Just these insane highs and gut-wrenching drops. It feels like pure chaos. But what if I told you there's actually a pattern to all that madness? That underneath all that volatility, Bitcoin's history follows this surprisingly predictable rhythm, a cycle of boom, bust, and then recovery. Okay, let's dive right in.
So, here's how we're going to tackle this. We're going to walk through Bitcoin's wild history by breaking it down into 4 main cycles. First up, we got to learn the lingo. Then we'll explore each of those booms and busts, and at the end, we'll see what the big picture, the overall pattern, really tells us.
All right, so before we can really dig into these cycles, we need to get on the same page. We've got to understand the unique language that's kind of sprung up around it. It's a world with its own lingo, and it's inspired by everything from, old school finance to fantasy TV shows.
So what's funny is crypto basically took these traditional market terms and just cranked up the drama. In the stock market, you've got your bull and bear markets. Simple enough. But in crypto, a crash is way more dramatic. It's a crypto winter. And yeah, that name was literally borrowed straight from Game of Thrones to describe one of those long, brutal periods where prices just keep falling.
Right. So a crypto winter is just that, a deep, long downturn. And so far, Bitcoin has been through 4 major ones. And by looking at the boom that came right before each of these winters, we can start to see that repeating pattern I was talking about. Okay, let's jump into our first cycle and see exactly how this all got started. We're heading way back to the beginning, a time when Bitcoin wasn't this big global asset. It was more of a niche curiosity for a really small group of pioneers. Man, the early days were just a total whirlwind. It all kicked off with the now famous Pizza Day back in 2010. That was the very first time Bitcoin was used to buy something in the real world. Not long after that, this new exchange called Mt. Gox launched, and that just lit a fire under the speculation. The price shot up from like fractions of a cent to 50 cents, and then, get this, to a full US dollar by early 2011. The race was officially on. And this little factoid really shows you just how niche this world was back then. The biggest, most important exchange, the place that basically created the first real market for Bitcoin, it wasn't some Wall Street startup. Nope. It was a website for trading Magic the Gathering cards. It just perfectly captures that Wild West vibe of the early days. So from a single dollar in January, the price just exploded. By June of 2011, one Bitcoin was worth $31. I mean, that is an absolutely staggering jump for something that was buying pizzas just a year before. The first bubble had officially arrived. But you know how these things go. Just as fast as it went up, it all came crashing down. That feeling of euphoria, it just vanished almost overnight. So, what happened? What could possibly pop this first incredible bubble? Well, what happened next revealed a super critical vulnerability. See, it wasn't Bitcoin's own technology that failed. It was the infrastructure built around it. There was a major hack at Mt. Gox. Yep, the same exchange that fueled the whole rally, and that just shattered everybody's confidence. It was a tough lesson that honestly would get repeated again and again. The security of the exchanges is just as critical as the security of the blockchain itself. And with that, the first crypto winter began. So after that first winter finally thawed out, Bitcoin didn't just bounce back, it went global. This second cycle is where we see the network really expand beyond that initial small group of fans, finding a huge new audience, especially over in Asia. Yeah, this next boom had a lot more moving parts. You started to see the mining industry get more professional with companies like Bitmain popping up. You saw real, legit businesses like WordPress and even Richard Branson's Virgin Galactic start to accept it. But there were other things going on too. A massive wave of interest thanks to Chinese state media, and of course, it got a ton of notoriety for being the currency of choice for the Silk Road, that marketplace on the darknet. And the result of all this new attention? Whoa, the price blew past its old high of $31 to a mind-boggling new peak of around $1,250. The scale of this bubble just completely dwarfed the first one. It really shows you how much the market had grown in just a couple of years. So what ended this cycle was this just devastating 1-2 punch. First, China, the very country that had pumped so much hype into the market, slammed on the brakes, hard.
They banned their financial institutions from dealing in Bitcoin. And then the ghost of the first crash came back to haunt everyone. Mt. Gox, which was still handling more than half of all trades, completely collapsed, losing a staggering 850,000 Bitcoin. So you have state regulation plus exchange failure, a brutal combo that sent the market right into its second long winter. Okay, let's fast forward to the cycle that a lot of you probably remember very, very clearly, the absolute frenzy of 2017. This was the moment Bitcoin really truly broke into the mainstream, and it was all driven by one of the most powerful forces in any market, FOMO.
Yeah, fear of missing out. It felt like every time you turned on the TV in 2017, there was another story about some person who bought Bitcoin for pennies and was now a millionaire. This created this intense psychological pull for everyday folks, this deep anxiety that they were missing out on the easiest money-making opportunity of a lifetime.
So you had this retail FOMO, and you combine that with near zero interest rates, which were pushing investors toward riskier stuff anyway, and it was just a perfect storm. The price shot up to almost $20,000. But a frenzy like that just couldn't last. It was eventually popped by a mix of things. Fears about more regulation coming down the pike, and the collapse of hundreds of scammy new crypto projects, and that ushered in the next long, cold crypto winter. And that brings us to the most recent cycle. The boom of 2021 and the winter that followed in 22, they were unlike anything that came before. They were shaped by this truly unique, perfect storm of global events. Everything from a pandemic to the rise of social media influencers.
You know, it's really hard to overstate the power of this one moment. On January 28th, 2021, one of the most famous people on the planet posted a single word, just a hashtag, to his millions and millions of followers. And the market just went absolutely nuts. The impact was immediate. And it was dramatic. Right after that simple tweet, the price of Bitcoin jumped 20%. This was a huge sign that it wasn't just about fundamentals anymore. Now it was about culture, it was about influence, and the sheer power of social media to move billions of dollars in an instant. But that whole Musk effect was really just one piece of a much bigger puzzle. The pandemic had created this really bizarre economic situation. You had governments sending stimulus checks directly to people. Savings rates in the US shot up from a typical 7% to like 33%. So with more cash, more time stuck at home, and rock-bottom interest rates, millions of people just poured into speculative trading. And at the exact same time, the big guys, the large institutional investors, were finally starting to take crypto seriously. So you put all that together, and it created the biggest crypto rally in history. It really seemed unstoppable. So the question is, what on earth could put an end to a boom that was being driven by so much money and so much hype? The answer? The real world came roaring back. Central banks did a complete 180 and started aggressively jacking up interest rates to fight inflation. And that makes risky assets like Bitcoin way less attractive. Then you throw in geopolitical conflicts, supply chain chaos. It all added to the uncertainty. And then, to top it all off, the crypto world itself suffered this series of devastating internal collapses. I'm talking about Terra/Luna and the FTX exchange that created this domino effect of fear and failure. So, after traveling through 4 pretty chaotic cycles of boom and bust, let's just take a step back for a second. If we look at all of them together, a really clear recurring pattern starts to emerge from all that noise. This table right here, it basically lays out the whole story. Every single boom was kicked off by some new catalyst, a new exchange, a wave of media hype, or just a flood of new money. And every single bust was triggered by a really familiar set of things: security failures, government crackdowns, or major shifts in the global economy. The names, the dates, the specific details, they all change, but the basic script, it stays remarkably similar. So we get to the big question, right? What does this pattern actually mean? On one hand, some people argue that these violent cycles are just growing pains, the kind of thing you'd expect from a revolutionary new technology as it finds its place in the world. But on the other hand, some people see it as a permanent feature, a fundamental warning sign of an asset that's built more on speculation than on any real intrinsic value. The history is written, but what it all means for the future, well, that's still very much an open question.